The big thing that everybody cares about is not what is mortgage insurance and all the details of that. The question is, how do I get rid of it? First question is, what is mortgage insurance? So mortgage insurance is an insurance policy for the lender, right? The institution loaning the money, an insurance policy in the event that the borrower was to default, right? So this is something that's been around since back in like the Depression era. So, 90 years or more now. So it's something that's been around. Anytime a home loan where you're putting less than 20% down. So it doesn't matter, conventional FHA, and then we'll talk about VA here in a minute too. But let's talk about the three types of mortgages. So there's VA, which doesn't have mortgage insurance, but it has something called a funding fee, which provides a similar purpose, which we'll talk about here in a second. There's, and VA, you can do a zero down purchase loan. So great loan for veterans. You can come in, buy zero down. It's a great option. There's FHA loans. FHA loans require a 3.5% down payment. They do have mortgage insurance, anything under 20%. And then you have conventional loans. So conventional loans, you can do anything from 3%, 5%, 10%, 20%, go on up. And those loans, anything under 20% down has mortgage insurance on those as well. One thing to keep in mind is your premiums vary, right? So depending upon the amount that you're putting down and the length of the term of the loan. So for example, a 15-year loan is going to have cheaper mortgage insurance than a 30-year loan. Okay, and then same thing, a conventional loan with 5% down, the mortgage insurance premium is going to be more than a conventional loan with 10% down. Because you got to remember, this is an insurance policy, so it's all about risk assessment for the lender. So the higher likelihood that you're going to be able to pay that loan back and that they're going to be in a good equity position, the lower the premium is for that. The annual premiums for mortgage insurance vary between 0.5% and 1%, so of the loan amount. So whatever your loan amount is, like for FHA, it's I believe 0.85% of the loan amount divided by 12, right, is going to be what your monthly mortgage insurance is, plus you're going to have your upfront mortgage insurance as well. But the big thing that everybody cares about is not what is mortgage insurance and all the details of that. The question is, how do I get rid of it, right? So you're looking at your monthly mortgage statement and you're seeing that you're paying, $100, $200, $300, $400 a month, maybe even in mortgage insurance. How do you get rid of that? Everything is expensive right now. I want to save some money every month. So let me go over a few requirements to be thinking about when you're looking at removing your mortgage insurance. If you have an FHA loan, you can't, okay? So any loans that were taken out after, I believe it was June 3rd of 2013, FHA mortgage insurance cannot be removed for those. So if you have an FHA loan, your only option is to refinance into a conventional loan to get rid of that mortgage insurance. If you have a conventional loan, okay, there's a few different things that can happen. One is if you've had that loan for more than 2 years, and you now have more than 20% equity in the home, right? That should qualify you to be able to have that mortgage insurance removed. Another option is if you've paid your principal amount down, right, to where you're now under 80% of the original purchase price, that would work as well. Or the other way is if you've just gained a lot of equity, like everybody has over the last 2 years, even if you haven't done anything to the property, but your value is now where you have 20% equity in there, then you should be able to remove that mortgage insurance as well. So you need to call your mortgage servicer, call them and say, hey, I've had my home for 2 years. I have over 20% equity. What is your process to remove the mortgage insurance? And they're going to tell you there may be some paperwork you have to fill out. There's costs associated with it. Anywhere from what I've heard, say $200 to $500 is the cost associated with the process of getting it removed, because they'll have to do some sort of an appraisal or a BPO, broker's price opinion, in order to get that removed. So best thing to do is if you're feeling like you have 20% equity in there, reach out to your loan servicer and say, how do I get rid of this? Any questions, give us a call. We're happy to help however we can. Have a great day.